Hello everyone, I'm super excited to be there today to present today's webinar, Buy Now, Pay Never, Combating Digital Lending Fraud with Graph Analytics. My name is Villedieu. I'm one of the co-founders of Linkurious, and for today's session, I'm going to be joined by Thibaut.
Hello everyone, so I'm Customer Success Manager at Linkurious. I have a background in fighting against money laundering and broadly fraud and financial crime. Before joining Linkurious, I am certified by the ACAMS, and I was previously financial security manager in a French banking institution. Very happy to be here with you today.
Awesome, let's get started. So here is today's agenda. First, we talk about the current context and challenges related to digital lending. Then we'll discuss using graph analytics to stop fraud networks. After that, we'll do a bit of an introduction to the Linkurious Enterprise investigation software. Afterwards, we will go into a demo, diving into a specific use case related to online lending fraud. Then we'll talk a little bit about architecture, how to actually apply this in practice. And finally, we'll have some time for a Q&A session. So let's get started. First, digital lending is growing quickly at around 12% per year. It's expected that between 2020 and 2026, digital lending market will grow from $311 billion to $587 billion. So it's a huge growth, and there's actually a lot of tailwind that's driving that. First, there's a very strong secular trend toward more business going from brick and mortar to digital channels, and that's obviously playing a big impact in this growth. But there's also a specific context here for digital lending. There's the economic uncertainty that we have today. There's also inflation, and there's the new popularity of products such as Buy Now, Pay Later. Think of offerings such as Affirm or Klarna, and all of these are acting as accelerators, driving this growth of digital lending. Of course, the digital lending business looks a lot like the traditional lending business, but there are also a few specific changes that come with operating online. First of all, when it comes to brick and mortar, it's easier to limit fraud because there's a lot of friction that comes with this context. For example, impersonating someone online is much easier than doing that at the counter of a bank. Secondly, loan applicants and e-commerce operations are pushing for fast decisions and as little friction as possible. So there's a lot of pressure on loan providers to act as quickly as possible and collect as little information as possible. And quick decisions with little information means very risky loans. And loan providers need to tackle head-on these changes with modern anti-fraud systems to really reap the rewards of this huge growing market. So we've been talking about fraud, but what do we mean exactly by fraud in digital lending? So let's talk numbers for a second. First, for every single dollar of fraud loss, there's approximately $4 of indirect cost for all US financial services firms today. So that's a number that has actually increased after the pandemic from 6.7% to today almost 10%. And right now, Buy Now, Pay Later providers account for more than 10% of payment fraud losses. And finally, when we're talking about fraud, it's not just small one-off fraudsters. There are also organized fraud networks out there that can generate millions in losses. So why should you care? First, limiting the losses related to fraud can improve the bottom line. Once again, for $1 of fraud that stop, you can save potentially $4. So it can have a big impact. Secondly, effective anti-fraud systems provide the flexibility to lower fees and or reduce the time to yes. And that means more clients, more growth. So good fraud practices actually can be translated into growth, which is very important in today's age. And finally, it's estimated that false positives related to fraud represent 13% of declined transactions. And if you can improve your anti-fraud systems, you can also improve that part of the client experience. So there's a lot of reasons to really care about fighting back against fraud in digital lending. The good news is that there's a new approach called graph analytics that help fraud and compliance teams uncover suspicious relationships and expose criminals. But first, what do we mean by graph analytics? This approach has been pioneered by the likes of Google and Facebook, and it consists in analyzing data as a set of relationships and entities. Graph analytics help collect data scattered across different silos. It's really the backbone to have a holistic anti-financial crime picture. And at Linkurious, we use graph analytics to detect suspicious patterns and accelerate investigations. And with that, it becomes possible to uncover across billions of entities and relationships suspicious behaviors that would otherwise go unnoticed. But let me give you a bit of an example around this. So here we are looking at a client, someone asking for a digital loan, and we see that one client connected to a bunch of information. There's an email, a phone number, an address, and an IP address. So there's some information, and the traditional approach would really be to focus on that person and the information we have about him or her. Obviously, we could look, for example, for the email provider. We could look at the domain and whether it's dodgy or not. We could look at the IP address. Does it belong to a blacklist or not? We can do this sort of checks, and all in all, it's valuable, and it's going to help spot some potentially risky clients. But the point that I would like to make is that it's not enough because sometimes when you look at this, you get the impression that the client is actually good when really it's not. And here we are going to see this situation play out by looking at the indirect connections of this client. So first, we look at the other clients that are sharing common pieces of information with our starting point, and we see 1, 2, 3, and 4 new clients pop up. They are all connected to a starting point via personal information, such as the email address, the IP address, and so on. So already, just by looking at our client's network, we see that there's something weird going on. There's a lot of other folks that are connected. But it's really when we drill deeper into the network and we look at the connections of the connections that we uncover something even more interesting. We see that our starting point is actually connected to 1, 2, 3, and 4 non-fraudsters. They are the people with the red ring next to them. And these folks are actually connected to the first level of relationships of our starting point. So what's interesting here is that when we look at things from the lens of the network, then we get a very different impression than when we only looked at the client in isolation. And we uncover what looks like a potential risk and potentially a ring of fraudsters reusing pieces of information to create fake identities, as in a case of synthetic identity fraud. So even though a new client looks apparently normal, when we consider its full network, it appears that it contains multiple fraudsters. And based on this understanding of the client's network, we should probably avoid granting a loan. Okay, so we have seen graph analytics can help leverage contextual information to make smarter decisions. Now let's see how the Linkurious Enterprise investigation software helps stop fraud network and protect your bottom line with graph analytics. So first, the Linkurious Enterprise investigation software provides a graph visualization UI. And with this visualization UI, it's very easy to get to the bottom of your investigation faster. You can see everything that's related to a given client or a given loan and use that to make better and faster decisions. Secondly, Linkurious Enterprise includes alerts and case management features. And with that, you can automate the discovery of complex patterns and enhance your current fraud detection capabilities. And finally, with the ability to share the results of investigations or an API that helps integrate new capabilities into existing tools, you can really tap into the collaboration potential of Linkurious Enterprise investigation software. So that's it for a quick intro to Linkurious Enterprise. Today, our software is used by thousands of investigators around the world, some of them working in financial institutions, such as Wells Fargo, and others in public institutions, such as the Indian Tax Office.
Okay, so we're going to now have the view and a demo of Linkurious Enterprise to actually showcase an example of how you can leverage graph to better detect potential financial fraud schemes and fraud rings. Just to set the stage a little bit for the demo, I'm going to explain a bit the scenario that we're going to use. You can see a quick example of a data model that was used to build the data set that is inspired by real use cases from clients, with a credit request that is at the center of how the graph is modelized, that are sent by clients online via the application, requesting opening a credit card or requesting a consumer loan, for example. And to this credit request are attached personal identification information, KYC information, such as the name of the person who sent the credit request, the email address, the phone number, and what we would call digital fingerprints, meaning, for example, the IP address or the device that was used to actually request the loan. So for this scenario, I'm going to pretend that I'm an analyst from a financial institution that provides buy now, pay later services and consumer loan through credit cards and direct loan to retail clients. We, as a company, for the demo, we can pretend that we are facing networks of fraudsters acquiring loans through synthetic identities and never paying them back, and that the anti-fraud department, for example, already has a risk engine, scoring engine in place that is able to reject or approve and score in real-time credit request. But I am unsure about the efficiency of the rules. So we're going to leverage Linkurious Enterprise graph investigation platform to look for communities of credit requests connected through personal identification information and digital fingerprints. The ultimate goal is to find if some approved credit requests are connected to rejected credit requests and see potential undetected fraud from fraudsters that slip through the gaps of our existing fraud detection engines. Okay, so let's go to the demo. And what you're seeing now at the screen is the alert environment, the case management environment of Linkurious Enterprise, in which I have an alert that is called fraudulent communities that looks for any credit requests that are connected to other credit requests through email address, phone numbers, digital fingerprints, email address, IP address, and devices. And this alert has generated 450 results that needs now to be investigated. Each case is here has an ID. Each case corresponds to a community in my graph, meaning a credit request linked through personal identification information and digital fingerprints. And then we have some statistics here, which would be attributes of the case that indicates within the community here, for example, 342, the total number of credit requests. So there are 8 credit requests within that community, among which 2 have been approved, accepted by the existing risk engine tools, and 6 have been rejected. And that makes a ratio of 75% of rejected credit requests. So if I scroll down a little bit, I can see that, for example, there's one community that is fairly interesting because it's fairly big. There's 10 credit requests, among which 3 have been accepted, 7 rejected. So there is a strong risk that within the 3 that have been accepted, there's actually potential fraudulent credit requests that slip through the gaps of our systems. So let's go ahead and explore it. I'm going to click here, and we can see the case just right here. So what we're looking at is we're looking at the community in the form here of a graph, where we have in red the credit requests that have been rejected by my risk scoring engines. And we have in green here some credit cards and consumer loans that have been accepted by my risk scoring engines. At first, what we can see is that, for example, there is a credit request here that is connected to a rejected credit request by sharing the same address. Why not? Perhaps it's an address that is like, for example, a building, or it's not risky per se. But if we look into a bit more details, we can see here that, for example, there is a specific device that was used to apply for the loan application that was used both in this credit request and this one that were accepted, but also by this one that was rejected. So it's a bit more here concerning because, I mean, an IP address can be shared, but a device normally is attached to a single client. And the fact that there's a credit request that has been accepted and that is connected to a rejected one through the same device is a bit more worrying. But it's continued the investigation, and I can see that there are some nodes that still have some hidden connections here indicated by the number 2, and I want to explore them. So I'm going to select all the nodes, and I'm going to perform our first expansions to see the transactions that are connected to this credit request. What I can see here is that I have some transactions that are represented by those blue nodes here, ones that have been transactions that have been accepted, approved, I would say, that are connected to this credit request. And I also have, for example, other credit transactions here in red that have been rejected because they are related to this credit request that has been rejected as well. If we look into, well, we still have some transactions here, and they have some hidden connections. And what I want to see is that what are the specific like merchants that are connected to these transactions, because the clients apply and go for a credit card or a consumer loan, or obtain those consumer loans and buy now pay later services directly through a merchant. And I want to see which merchant are there, and is there any specific logic here. So I selected once I get all the nodes, and I'm going to expand the merchant, expand here. And quite interestingly here, there's the merchant node here that is represented by this node. The same merchant is connected to all the transactions here, the one that were rejected and one that are accepted. So the clients who actually obtain those credit cards actually spend money at the same merchant as the one that that were rejected. And if we look at the timeline to see if there's a specific logic, we can see, for example, that the rejected transactions happen on September 15, all the same on a very short amount of time. They were rejected, and then 1 week later, approximately, they were accepted. So it could very well be the case that we have like a network of clients that try to obtain credits, consumer loans using synthetic identity. Our risk scoring engine here got it, so they rejected, but they are persistent and they try again with a different set of synthetic identities, and then it gets accepted and it slips through the gaps of our detection systems. But thanks to Linkurious Enterprise, I was able to detect that through more discrete relationships, such as like the device that was used, the merchant in which the money was spent, and identify that, for example, there was this particularly new set of synthetic identities that were used to obtain those credit card, and now it got through under our radar. So what I can do now here is, for example, run a query, specific query that will allow me to put a specific tag on a node and indicate that it's a potential fraud. Run it, and now I can modify that node, indicate to my colleagues, and write back in my graph database, for example, that this particular credit request is suspicious, potential fraud. What I can do at this point is save my case. Here I can, for example, I can assign it to myself. I get myself here, and I can confirm the case. Confirm, for example, network, and indicate to my colleagues that this is a suspicious case. Okay, so this concludes my demo, where you could see that I was able to quickly analyze a community of credit requests connected through discrete relationships, and identify that there were some undetected credit requests that need to be considered as potential frauds.
Thank you so much, Thibaut. So let's talk now a little bit about how to integrate Linkurious Enterprise within your infrastructure. And we have a bit of a slide that can explain how to do that. So we see on the left KYC, transactions, and contracts, information sitting in different databases. We see up top a client who is making a new credit request. Normally, this would be routed to a risk scoring engine using business rules, machine learning, different approaches to review and take a decision on this credit request based on information such as the KYC, the transactions, and the contracts. But in this scenario, the data that I just mentioned is also routed to a graph database, such as Neo4j, which is a product supported by Linkurious Enterprise. And the traditional risk scoring engine and the graph-based rules are combined, consolidated to provide an improved credit score that takes into account both the traditional parameters, but also the network of the client and the credit requests. After that, there's a few options. Maybe the risk score is very low and the credit request is approved, and that's it. There's no further action from a fraud perspective. The credit request can also be rejected in red, And in this case, it can also be routed to Linkurious Enterprise for enhanced analysis. An analyst can look at the situation, at the context around that credit request to see if, beyond that that rejection, there's other clients, other suspicious informations to uncover. And finally, there can also be alerts for risky or complex transactions that don't require an immediate decision. And they can also be routed to Linkurious Enterprise case management system so that a fraud analyst can have a look at that. And then, based on the feedback provided within the Linkurious Enterprise interface, via the comments, via the sorting of the alerts in different buckets, you can create a bit of a continuous improvement loop to both continuously improve your risk scoring engine and the graph analytics-based rules. So that's it. That's really how you can combine both your current risk scoring capabilities with a graph-based approach with Linkurious Enterprise to really get the best of both worlds and improve your anti-fraud posture. We do have some time for questions, so now is the time to ask them in the Q&A section of the interface.
Yes. All right, so thanks, Jean, Thibaut, for the presentation. I do see a few questions starting to roll in. So the first question we have here is, do you offer any trial versions?
Sure. You can reach out to contact@linkurious.com, and we provide free trial versions so that you can test out the software for up to 1 month and make sure that it's a fit for you and your team.
Perfect. All right, the next question says, how do you work with companies that already have a fraud detection system in place?
I would say that this is the most recurring situation for us. Typically, when we come in, clients already have some sort of system in place, and our software can very much be integrated into that sort of scenario. So we have clients that combine the alerts generated by Linkurious Enterprise and the existing risk engine, and assess, review them within the Linkurious Enterprise case management system and investigation UI. So that can be one scenario. Just like we have clients that already have a case management system, and they integrate new alerts generated via Linkurious Enterprise into this case management system, and also integrate our visualization UI to add context to the alerts generated within the case management system. So it's definitely a situation that we are comfortable with. I would say.
Okay. Next question here: do you have any training or onboarding material?
Thibaut, do you want to take that one?
Yeah, sure. So in terms of training, depending on the license type of the client, comes a series of what we call customer success activities, but basically are in the form of trainings. So both for end users, administrators, on basic, I would say, features of Linkurious Enterprise, but also specific deep dives on the most advanced features like the queries that you've seen in the demo. So yeah, we provide a set of training as part of the license. We provide also professional services if you wish to have more customized, personalized trainings. And in terms of onboarding, yes, we provide specific onboarding, but also what we call a customer success path, meaning that we put a strong emphasis on providing a good onboarding to clients, understanding the needs, and tailor the relationship from there on with the clients to make sure that their project is successful.
Okay, thanks, Thibaut. So let's see, that looks like there's just one more question here. Do you have any clients doing these types of investigations?
Yes.
Bo, do you want to take that one?
I can start. Yeah. Well, the use case I've seen in the demo is inspired. It's with dummy data, but it's really inspired from a real project that we've run with a client in the business of buy now pay later. So yes, and we also have a lot of clients who use Linkurious Enterprise for first party and third party fraud in the banking industry, and also in the insurance industry, where they're looking for connections between different insurance claims, connections between professionals, medical professionals, lawyers that work like in cahoots with clients to send fake insurance claims. And obtain money. So we help them leverage graph to better detect those kind of connections, this kind of collusion.
Great, thank you. So it does look like that's it for the questions today. So again, we do want to thank everyone for joining our webinar. We will be sending you the recording as soon as it's possible. But if you have any questions in the meantime, you can, of course, visit us at our website at www.linkurious.com and reach back out to us. So thank you, everyone.
Thank you all.
Thank you.
Bye-bye.